In today's video, I'll show exactly how to define the market stages and market structure like a pro. In fact, using this method, I managed to avoid massive losses over the years. It is the number one question that I need to answer before taking any trade. Hi, my name is Khaled Maziad and I am the founder of Trading Roadmap. Welcome to the first module of our free trading course, The Trade Journey. As you read this disclaimer, if you are new here and you want to learn how to become consistently profitable trader, how to manage your emotion, and how you totally to change your life, please start now by subscribing and click the bell button so you will not miss anything. And today I'm gonna walk you through the entire process of defining the market stage and the market structure, and we are starting right now. So today we will discuss what the price chart and what are chart types and the market structure, and we'll have some live charts and the market cycles. We're gonna discuss this also, and we're gonna have some live charts, and I'm gonna give you assignment at the end of the module, so make sure to watch the entire video so you'll not miss anything. So what's the price chart? So the price chart is not the market, it is just a tool to display the market data. And you might say like, so what does that mean? What does that exactly mean? That there are some valuable information that we can receive from the chart. Those information are where the price has been. It tells you exactly the history of the price, and also where is the price now. So it tells you exactly what's the value of this asset right now. And also sometimes it shows you the path for the least resistance, and I'm gonna show you exactly what does that mean. And this information is very valuable to us, and you might ask why, and you are right. And here I have a quote from Paul Tudor Jones, and he said, there is no reason to take substantial amounts of financial risk ever, because you should always be able to find something where you can skew the reward risk relationship so greatly in your favor that you can take a variety of small investments with great reward risk opportunities that should give you a minimum drawdown pain and maximum upside opportunities. And that's our goal. That's exactly what are we looking for. And I'm gonna show you exactly, there is another reason why we need to understand this information that I'm gonna share with you at the end of the video, because if I told you now, it's not gonna make any sense to you. So let's go step by step. So the chart types we have, what we're gonna discuss today is the candlestick and bar chart, line chart, and point and figure. We are not gonna go through exactly the meaning of everything, but I'm just gonna give you an idea about those ones. And I use candlesticks. So, but you need to understand what kind of charts we have. So, what we have here, that's a candlestick chart. So it's easy. So just a quick, we're gonna have an entire module about the candlesticks. But if you have no idea what the candlesticks, so these bars, here is the opening of this bar, the red one, and then here is the close. So this one opened here, closed here. Here is the high of the bar, here is the low of the bar. For the green one, the same. So the green means here is the opening price, so the price started here and then closed here. Here is the high and here is the low. And then we have the bar chart, and the bar chart, same idea. So this tick on the right, it means here is the opening price, and sorry, on the left here is the opening price, and here is on the right you have the closing price, and exact same issue. And here is also the high, here is the lows. For the red bar, same issue. You have here is the opening, here is the close, here is the low, here is the high. And then you have the line chart. And just one thing you need to understand about the line chart, that it doesn't take in consideration the highs and lows. We only use the closing price. And here is a point and finger, and you can read about this. We are not gonna use it, but you just need, if you are curious about any of those, there are you can search about it, and you can even contact me. I'll tell you exactly where you can find some books about this. So let's start with the market structure, and we're gonna talk about today. There are three possible things that's gonna happen. The price gonna go up, or the price gonna go down, or gonna go sideways. And as you know, like most of the statistics say, most of the time 60 to 70% of price is just in range. So but what exactly we mean about the uptrend, what exactly we mean the downtrend, what exactly we mean about range? So all you need to understand about the uptrend that the buyers are in control. And what I mean by control, we don't mean the buyers are more than the sellers. That's wrong. The number of the buyers exactly are the same the numbers of the sellers. When we have an uptrend, we have the buyers are aggressive. They are more aggressive than the sellers, which means in other words, you can say the demand is high and supply is low. And what we mean by that, let's pretend we are going to the market and we're gonna buy Apple. And let's use this. So that one, we're gonna buy an Apple. And today's price of the Apple is $3. No one is buying it. So they're gonna drop the price because they have like certain amount of apples. Sorry for my drawing. I know I'm horrible in drawing, but whatever. So no one is buying. So what they gonna do? There is no demand. So what they gonna do? They gonna drop the price. So people gonna buy. So now you're gonna drop it to be $2, and now people gonna want to buy. So if you have like 10 people and they wanna buy those four apples, I have only four apples. So what do you think gonna happen? They can increase the price. So they're gonna say, okay, like guys, you are 10 and I have only four apples. So who gonna pay high? So that's like just a rough idea about the demands on supply and what we mean by supply and demand. So all you need to understand right now is that when we talk about supply and demand on uptrend and downtrend, that who are in control right now. That's the entire thing we need to understand. So let's move to the next slide. So in this chart, I'm just gonna show you. So all you need to understand now first, if you are new to this, we have highs and lows. Those are swing. So what we mean by swing, and I know like don't confuse yourself right now. All you need to understand, that's a high and that's a low. So the price has been here first and then we dropped. So that was the high, the previous high. And then what happened next? I know you can choose this one and you can use this as the next high, but for now we're gonna use this one. And you are totally right if you are saying this, but why I'm taking that one, and I know that sometimes it's gonna be some subjectivity about it, but I have taken this one because the lower low here, the higher low here was just deeper, and I just want to make it sense. So you have a higher high, higher low, higher high, higher low, higher high, still higher low. It was a deep retracement, but still higher than the previous low. So I'm gonna count it as a higher low. And then we have this one just broke out of the previous high, but still a higher high because we made a new high. Then higher low, higher high. Then we have this as a higher low, still higher than that one, so we can count it as a higher low. And then we have here higher high, higher low, and then here we have a higher high, higher low. So what is this? That's an uptrend. Even without understanding anything, like look at this chart. Is it going up or going down? It's just going up. So let's go to the next slide. Now we have this. What do you see here? So we're gonna start from here. So we have this is the first high. We're gonna call this the lower high because it's lower than this. So it's lower than the previous high. So that's why we are talking about this lower high. And this is lower low in relation to this low. So it's lower than the previous low. So whenever we say a higher high or higher low, we are talking about the previous high or previous low. So we are talking in relation to the previous high or previous low. So here it's a lower high, lower low, lower high, lower low, lower high, lower low, and then lower high. So we are in a downtrend. And even though if you don't care about the lower highs and lower low, we are in a downtrend. Next, this one will be tricky because here you have a high. So whenever you start from a certain point, that will be your high because I don't know what the previous high or low is. So for now, that's my high, and then now that's my low. So in relation to this one, this is a lower high, and in relation to that one, this is a higher low, which is weird. We don't understand what it is. I understand the higher highs and higher lows, but here we have a lower high and a higher low. So it's not an uptrend, it's not a downtrend, so it's strange. So if it's not an uptrend, if it's not a downtrend, it's sideways, it's just a range. And then next, what do we have here? We have a lower high, which might be a definition for a downtrend, but we still have relatively a higher low, which is still in range. And then look what happened here. We got a higher high, and then we got a lower high. So this part is an uptrend. However, what happened next is we go down again. So when you have something like this, you can say, oh, this is uptrend, this downtrend. So instead we say that's range. So this part is just a range. I'm just trying to show you exactly the same thing without swings, and you can understand this something. And you might break it down also, like don't confuse yourself, because you might break it down like this and say here that was range, and then we have a breakout here, and then it failed and it came back, and then it come back to test this, and then it came this sell off, and then we are tried to came back again, and then we have this. But basically, since we don't have the lack of having an uptrend or a downtrend, that means we have a range. So let's practice with some live charts before doing anything. So how I like to start doing this, just gonna go back till here, and let's start from any point. It doesn't really matter. Let's start from here. I'm gonna refer to one point. So as we mentioned before, we're gonna start with the 13 high. That will be our high, and then we're gonna start to relate to it. So first, here that's one. So now we have here higher. Let's say so start from here. So we have here a high, we have a low, then we have a higher high, and then we have a lower low, which means at this part we are still in range. Then we have this breakout up, and now we have a higher high, and then we have a higher low here. So if you're gonna zoom at this one, that's a higher low, and then you're gonna keep going. What happened here? We broke the previous low, so we have a lower low, and this one we can count it as a lower high. So now we started, we're gonna see to confirm the second one what's gonna happen. That's now we're gonna have a lower high, lower low, lower high, lower low. Of course you can see it differently. You can adjust your swings differently, but you got you got the idea. And then see what happened here. Now we have a lower low, and then now this is a lower high. Remember always we're gonna confirm the lower high after we break the low. So now that's a lower high, and then now we're gonna have this a lower. Is it? Nope. See? So we thought that's a lower low now, but was it a lower high? No, it's not. But be careful, now we broke the higher high. So now we broke the previous high. So technically now we have another high. So that's a higher high relative to this high, and this one is a higher low relative to this one. So technically now that might be a start of an uptrend. And look at this one. Just got it little bit, just one tick or just a couple of pips. And then we broke down again. So break the lows here. So relative to this one, relative to the previous one, we have now a lower low, which means we are in range. And if you look, that's range. And look what happened here. Lower lows, same. Then this is relatively lower high, relatively higher low, which is still in range, still in range. And then that's a lower high relative to this high, and then higher high, and then now another high. See what's gonna happen here. Oh wow, look at this retracement. And then we broke the lows now. And look what happened here. Now low, higher high. Sorry, so here is lower high, lower low, lower low, lower high, lower low, lower high. Let's see what's gonna happen. That's a massive downtrend now. So that's a downtrend. There is no one can dispute. So I just want you to look at this and look at that. If there is anyone can deny here, that's we are talking here about two different structures. Here is absolutely we don't know what's happening. Sometimes it's a higher high, sometimes it's a lower low, sometimes it's a lower high, sometimes. But here it's just lower lows, lower highs, lower lows, lower highs, lower lows, lower high. Now we have a lower low. We don't have a lower high yet. Look at this. Look at this. Look. Wow. That's a downtrend, and that was the massive sell off in the oil in 2014. You're gonna move forward just to make it easier for you guys and see as we go here what's happening. Here is a higher high, higher low, higher high. We're waiting for the low to confirm and see. Now we have a breakdown again, but this was range. This have a higher low, higher high, lower high, and then we start another. Just gonna pause here. So what we have here, that was range. So we have relative to this, we have a higher. We have still have a lower high, but here we got a lower low, higher low, and then we have a higher high, and then we have technically you can say it's a higher low, and then we break down again with sort of lower highs and lower lows, lower highs, lower lows, lower lows, lower high. Technically we broke here the structure again, and then we got a range, and then we have, you got the idea. And I'll tell you now, like, I didn't tell you why we are doing this, but actually, I'm gonna tell you now why this is important. And why I said it is the number one question that you need to understand. Half of this question: what stage we have right now? What's the market structure? What's the market is doing right now? You need to ask yourself this question: why? So you know, if you're gonna take a trade, you can manage your expectation. And what I mean by managing your expectation, so let's pretend you are, for whatever reason, you're gonna buy here for whatever reason, like it's a counter trend. Why I said a counter trade, but first I had to ask what is this. So the trend here is down. So after I define the trend, I know now I'm countering the trend, and now I have to manage my expectations. So I can't say here, hey, I gonna hold this trade. No, you can't hold this trade right now because we are in a downtrend. So if for whatever reason you wanna take this buy here, and you're gonna buy here, and you're gonna take this trade to the upside, you need to do it very quickly, and you don't need to hold that much. You don't say here hold for the winners, because you're gonna lose here. Yes, it's a winner for maybe for 1 day or for whatever, but you need to be very quick because you know exactly that we are in a downtrend. By giving this information, you're gonna start think differently, because some people say yes, you have to let your winners run. That's right, but when and for how long? That's another question you need to ask. It's not just because I have this winning for like 3 days. Yes, you have it winning for 3 days, but you are against the trend. It To be honest, we don't know what's gonna happen next. You might be right, and then we're gonna break out to the upside from here and just reverse. But by managing my expectation, by knowing the first question I have to ask, what do we have now? Is it an uptrend or downtrend on range? By answering this question, you can understand exactly how you're gonna manage this trade, and that's gonna be another module. But see, by just looking at the chart and defining the structure that we have, looking, hey, we have here is high, and there here is low, and then we have, you might say that's a higher high, higher low, higher high, higher low, higher high. I know I'm in a downtrend. I don't want to hold a long trade here. Even if you are doing this on a lower time frame, by looking, and that's gonna be another module. Also, we're gonna talk about time frame. But by understanding that the structure of the market you are trading, you can avoid massive losses. Because if you are taking a long trade here and it was profitable for like 2 3 days, and I know some people, because I know many traders, they took trades like this and say, hey, I'm profitable. Yeah, good on you. Good for you that you are profitable, but the money has been made here, not here. It's good that you're gonna make money whatever way, but instead of just focusing about staying here, you can think about here. But that's another story. But by understanding the market structure, you can define and manage your expectation and know exactly how to hold this trade and how to manage this trade. I wish it's clear now for you, because that's very important. So let's jump to the next thing, which is the market cycle. So we're gonna talk now about the market cycles, and Richard Wyckoff was one of the pioneers in the technical approach, uh, in studying especially the stock markets. At He started early at the age of 15, and by the age of 20 he started to run his own firm. And he also founded the magazine of the Wall Street. For At that time he had like 200,000 subscribers, and you are talking about 1930s. So having like 200 subscribers at this stage, that tells you like it was a phenomenal success. So, and Wyckoff developed a method to understand the market. He observed the market cycles based on the large market players and the buying and selling pressure, and we gotta understand this. I'm gonna show you exactly what we mean by this. So if we go to the next slide, and he said basically we have four stages, and that's now I'm gonna tell you exactly why we have these modules like this. So we first, I showed you how to define the uptrends, the downtrends, and the ranges, and here is why I started like this. Because without understanding how to define it, you will never understand this. So the four stages are accumulation stage, and then the markup, which is uptrend, and then the distribution stage, which is range, and then the market down, which is downtrend. Easy. So four stages: accumulation, markup, distribution, and market down. And we'll go through now exactly every single stage. So we have here the accumulation again, markup, distribution, market down. And you gotta understand now every single stage. So we're gonna start with the accumulation stage, and during the accumulation stage, if you're gonna describe it, is some people call it the base, but I'm gonna show you how this get kind of vague and how it's not that easy to define it. But let's now just worry about how what is the meaning and what's the definition of the accumulation stage. So what's happening during the accumulation stage is that the big players, or we call it the smart money sometimes, are building a position without showing any signs. And we're gonna talk about some of the signs they show later on the course, but today, guess what? They try as much as they can to not show any sign. So the public are not interested in this market as it's just going sideways. And if you are using moving averages, it's just gonna be flat, and sometimes you're gonna have range expansion to the upside, and the name of the game, it's boring. Like everyone is saying, what the hell we are doing here? It's really boring stage to say that. And that's what I mean by it. Like the market is doing absolutely nothing here, just going up, down, up, down. Let's talk about the higher highs. So if this is a high, this is a low, then higher high, and then higher low, and then another higher high, and then another higher low, and then another higher high, another higher low, and then, but it's very tight range. So even that, you might think that's an uptrend, but it's a really tight range. You're talking about something between $1, that's a sugar chart. So moving average are flat. It's range. You're not interested in something like this. And then what's happened next? The markup, which is the classic uptrend, and let's go. Big players are selling some of their positions and holding some during the uptrend. The public starts to be aware about the price movement and it becomes interested in the market. And you're gonna find like this little girl there. Everyone is so excited and everyone is just making money. You just buy something and then it's like the bull market. You just buy and the price go higher. The price gonna be above the moving average, and that's not a surprise because anyway the moving average is calculated from the price, and all the moving averages are pointing higher. The classic uptrends, higher highs and higher lows, and the strength of the market may vary from market to another. Like during this stage, every even in a bull market, every stock gonna act differently, and even sometimes every time frame gonna act differently. I'm gonna show you exactly what we mean by this. So here is the market is just going up. Yes, that's a massive. It reminds you about something like Bitcoin, but that's sugar, not a Bitcoin, and that was in 2006. And see, like everything, as we said, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Must just going up. Price above the moving averages. The moving averages are pointing higher, Everyone is excited, everyone wants to buy. No one, some people, yeah, think about selling here, but everyone's just, the chart's going up. And then you go to the distribution stage. Some people call it the top. So big players are selling some of their position and they start even go short in this range. Public, especially who missed the uptrend, is becoming more aware about it and they are trying to add to their position. And guess who is selling to them now? The big players. Moving averages are flat because it's range. Sometimes range expansion to the downside. And here, like I have this little photo here telling you from market to user direct at wholesale price because the big players are selling and they start to short at this stage. I'm gonna show you exactly what I mean here. Here we are. We have here range. Moving averages are flat. Some people start to buy here, and I just want to mention what I mean by range expansion. So don't forget at one stage, let me grab these two. That was the range here, and then we have a range expansion to the downside, and then we came back up to touch to test this range, and then we came back, and then I'm gonna show you what's gonna happen here. And then we have the market down, which is a classic downtrend, and this is the end. And it's time to say goodbye. The big players are buying back some of their positions. What I mean by buy back, because when we sell, how to cover your position, you buy back. And they add to their positions. The public realize that the party is over and they started now the panic mood and the price below the moving averages. All the moving averages are pointing lower. Classic downtrend, lower highs and lower lows. The strength of the market may vary from market to another and even from one time frame to another. And here we go. Look at this massive sell-off. Like, even you're gonna define how you gonna define here's higher, the lower highs and lower lows. You want that's a low, that's a low, higher low. It depends how you're gonna define it, but you see it's a massive sell off. All the moving average are down, the price is going down, everything is going down. And now you might ask yourself why are we talking about this? And again, and I'm just gonna repeat it another time because this we need to find a trades that we can skew the reward to risk in our favor. So you don't need, some people say you can do this by being actively trading, but that might be right sometimes, but you don't need to. Because if you can just wait and find a good opportunity and master one of those arts. So I know some people that they just trade ranges. Some other people they just trade trends and pullbacks. Some other everyone can use different method, but as long as you understand, you need to understand this. And practice makes perfect. So let's try one more time to practice. Oh, here we go. So now we're gonna take the same chart again, but I want you at this time to define what's distribution and what's not. Because I'm gonna tell you, so there is one thing that I didn't tell you. Trading would be very easy if it just goes like this, but we're gonna discover something now. It's not always as easy as it looks, and we're gonna prove this to you now. So let's start from here. So let's get here. So let's say start from here. So you might say now that's a distribution because we have an uptrend or sort of uptrend here, and then we start the downtrend, and then we have here distribution stage. So what after distribution? Well, sorry, the accumulation stage. What after accumulation? The price should go up. Guess what? Price went down. Okay, so the price went down. That means now we have another accumulation stage. So you didn't get accumulation, the price just went up, and it happened that it might be that's all accumulation stage. And then you have this. You might say that's distribution after this an uptrend, but it doesn't go like this. We have another uptrend. And then you might say that's distribution, and it's very small distribution, but you might be right, and then it just go down. So you might think that's a pullback because that's the start of the downtrend, but you're wrong because we started another uptrend here. And you might say that's another distribution here, and we're gonna go sell off from here, but we didn't, and then we started here. So it happened that this whole period was like accumulation for this stage and just went up, and then we started another range. And if you're gonna define it by accumulation, uptrend, distribution, downtrend, you are wrong, because what happened here, you're gonna think this distribution and we're gonna sell off from here, and what happened? The price went higher and higher and more higher and more higher, and then give you some sort of distribution. It might say sell here, no, it goes up, and then you have the sell off. There's another one, breaks the highs, and then without giving you like the classic distribution stage, you start to sell off, and then we start a massive downtrend. And then see the classic lower highs, lower lows, lower highs, and then lower lows, lower high. So that's in a downtrend. So that's what I mean here. If you are in a downtrend like this, you don't need to buy here. Or if you're gonna buy, that's what I said, managing your expectation. And that's a very important lesson to take today, that by defining the market structure, you will learn how to manage your expectation. I think you get the idea, and I'm gonna give you an assignment at the end. You have to go through it by yourself, because it, it's gonna make sense to you when you try to do it by yourself in different markets and different time frames. It's gonna be fun for you. So the conclusion now that we got, it's not that easy, and the whole idea that I'm trying to show you the truth. I'm not trying to show you here like some textbook examples. I'm gonna show you, here's the thing, that is the only one way to learn something is doing this. Because to be honest, that's not the case. That's why I insist on using live charts. So I don't want to just show you the theory, and then when you look at it, you're gonna look at a couple of examples that's gonna make sense to you, and then when you try to go through it by yourself, you're gonna find it's totally different. No, I'm showing you the theory. I'm telling you that the theory, and I'm showing you the secrets how to use this theory. And it all starts with your mind. You have to start this battle mentally first, and don't think about trades now. Because I know many people who, when I show them this, they just think, okay, so how am I gonna make trades? I don't want to make you trades now. Don't think about trades now. Think first about understanding. Then we're gonna talk about trades. It's crucial. It's very important to understand this. So now let's just do a quick recap what we have learned today. So today we discuss what's the price and what's the charts and what are the different uh, type of charts that we have, and the market structure from uptrend, downtrend, and range. We also went through the market cycles, the four stages: accumulation, markup, distribution, market down, and I showed exactly how to define them, and I showed you also how to use them to understand, at least mentally right now, when you think about a trade, and how gonna use this information to manage the trade. And before you manage the trade, you need to manage yourself, which is your expectation. So we're gonna start here with the assignment. So I'm gonna give you an assignment, and please do me a favor. It's not gonna make any sense if you just watch this video and don't take the assignment. And I know that it's not a sexy assignment that everyone would like to do, but I'm 100% sure this assignment gonna change your view how you look at the charts. I'm saying this from experience for myself and for my students. So we're gonna start now. I want you choose 5 different markets or different time frames, whatever you like. I want you to identify the uptrend, downtrend, and ranges. Identify the 4 different stages of the market. And even when you find like an accumulation and then you go up and you think it's a distribution and it's not distribution, it might be another accumulation, so call it accumulation, that's fine. And then if you want to take this a step further, it's not required now because we're going to discuss this, but if you want to take this step further and you have some more time, try to spot the pattern that precedes a breakout of ranges, because you have two kinds of ranges. You have the range for during the accumulation stage, which before the uptrend, and you have the range before um, the downtrend for the distribution chain. And warning, don't think about trades while working on this assignment. I know many people when I show them this, what they do, they think about how they manage the trade, they think about how to enter the trade, they think about how to I don't want you to think about trades. And remember what I said, that's the number one question that you need to answer before taking a trade. Where we are. Is an uptrend? Is a downtrend? Are we anticipating that's gonna be accumulation or distribution stage? Where we are in the chart. Don't think about how you're gonna manage it. Don't think about taking a trade. Just think about understanding this. It's very important to understand. Very, very important, very crucial. If you really want to be successful, if you really want to be a consistently profitable trader, if you really want to know how to manage your emotions, this is the key. It starts from understanding. Yes, we're gonna talk about how also to manage your emotion other way, but by knowledge, by understanding, you're gonna have the first seed of how to manage your expectation and how to manage your emotions. And I want you to comment below now and say, I'm ready. I'm ready to take this assignment. I'm ready to start doing this. I'm ready not to think only about trades. I'm ready to understand. Comments below. And I really appreciate your comments. It's really important for me to do this. So I'm doing all of these, I'm adding all of these value for you. I need you to understand. I need you to be profitable. I need you to be successful. So help me by taking some time and do those assignments and tell me. And if you want to know how to connect with me, connect with me. I have here my personal page, our Facebook page, Trading Roadmap, on Twitter, on Facebook, or even you can send me an email. And we might have a coaching session with you if you can contact me, and then we can have a chat, and after that we can decide about this. So thank you for watching, and please hit the subscribe button and like this video, and make sure to watch the next module. Thank you.